Bitcoin, over the course of just over a week, ended up losing 20% of its value. But I think Bitcoin, for the most part, the glory days of Bitcoin going up thousands of percent, I think those days are over. And people are going to need to accept a world where you get just average returns.
If you don't prognosticate, you don't know what's going to happen in the future. So somebody might ask you, well, how do you trade then? Because if you don't have at least an idea of where an asset class is going to go, how do you make a decision to whether or not to hold, sell, or buy? Our next guest called the top in a lot of important frothy sectors, including quantum computing, which has since collapsed since the call. So we're pleased to welcome to the show Lance Breitstein. He is the host of the TheOneLanceB channel on YouTube. Great channel for traders. Check it out, link down below. He's also the advisor to SMB Capital. He's a veteran trader. He's been working as a professional trader for many years before jumping into the YouTube sphere. So he's also, by the way, going to be featured in the upcoming book by Jack Schweiger in the continuation of the Market Wizards series. So very excited to get Lance on the show today. Welcome to the show. Good to see you, Lance.
Thanks so much for having me. Appreciate it, David.
Lance, what was the call that you made a couple of weeks ago or a couple of months ago that was rather prescient? I'm talking about quantum computing. I'm talking about other frothy names in the tech sector. Tell us about that.
Yep. So essentially in October, we had reached a fever pitch in certain sections of the market. Now, one thing I think is important is you need to be able to divorce your view on the frothiest sectors from the overall market. So I was fairly confident that sectors like quantum computing that had just been making astronomical legs higher, certain stocks like OKLO, which is in the SMR nuclear space, some of these stocks had gone up so much and it's such an unsustainable rate that the likelihood of them putting in a top was nearly inevitable at that point. But I was able to then, of course, divorce that opinion from the overall market, which is mostly grinding higher and, in my opinion, not overdue for some big crash or correction.
But the overall market is driven by tech, is it not?
Absolutely driven by tech. That being said, it's mostly some of the names like NVIDIA, Tesla, Palantir, the really, really large market cap stocks, Microsoft. That being said, you had these pockets of froth in quantum computing, names like Rigotti, RGTI, IonQ, IONQ, QBTS. So these were stocks that really don't represent well in the NASDAQ just because they're smaller market cap, but they were making crazy moves. Stocks that had gone from a couple dollars a few years ago to, or even just a year ago. It's not even a few years. Just last year, some of these stocks were at $1, $2, 50 cents, and now they're at 25, 30, 40, $50. So they had astronomical rises on what I would consider very hopeful hopes that quantum computing in the distant, far-off future would somehow become meaningful, which is just hopium to me.
Okay, so why did some of these quantum computing names collapse in the last couple weeks?
So ultimately, it wasn't even something fundamentally driven, but I think it was just purely a change in sentiment and too far, too fast. And their fundamentals are almost impossible to value because there is no business right now. These quantum computing names, their revenues are something like a couple $1 million. Their revenues are nothing. Same for the nuclear name OKLO. There are no revenues or ways to truly value this. It's just a total guess of what these could be worth in 5, 10, 15 years should quantum computing become a thing, should the SMR nuclear side of the business become a thing. So it's not even fundamentally driven.
Is it fair to say, Lance, that the people who are concerned about an AI bubble, well, that's already popped in certain really frothy AI subsectors like quantum computing, which, like you just mentioned, generate very little of no revenue at all, which is reminiscent of the 2000 dot-com bubble, right? So maybe We've already seen that bubble pop for those particular subsectors. What about the rest of the tech sector? So this is an article from Yahoo Finance, dated just 2 days ago, 3rd of December. Two of Wall Street's biggest firms say the AI boom is far from a speculative mania. BlackRock and Bank of America say this cycle is being driven by real corporate investment earnings and productivity gains, not the kind of irrational exuberance that defined the dot-com bubble of the early 2000s. Well, irrational exuberance may be popping up in quantum computing and some other names, meme stocks perhaps, but not the rest of the big tech names. That's the theme of the paragraph that I just read here. So do you agree?
Totally agree. And I think bubble is just one of those words where in this modern era of clickbaits and headlines, everything's a bubble. If a stock goes up, it's a bubble. If you look at something wrong, it's a bubble. And so what do I truly consider a bubble? I consider a bubble, first of all, just an extremely sharp increase in price over time that has no financial bearing whatsoever. And so if you look at the dot-com bubble and the crazy valuations, that is more analogous to the quantum sector, where people were just buying up stocks. Even right, you adopt the dot-com, all of a sudden the stock goes up. And so there was no real basis to what may or what eventually didn't come to fruition for many of the names. And similarly, you had the quantum sector where even people like Jensen Huang of NVIDIA, he is saying this is at least 5 to 10 years off. And so if you look at the financials, how do you truly value a company that only has $1 million or $2 million revenue, but it's being traded for billions and billions and billions of dollars in market cap because people are just hoping that 5 to 10 years from now, quantum computing will exist and it will be these very specific companies, which who knows? And what I would argue further is whatever the belief is, the market price really shows the truth because there were no true quantum leap advancements in quantum, but for a stock to go from 1 to 40 or 50, those are tremendous moves. Now, if you contrast that with something like NVIDIA, it's hard to call NVIDIA a bubble. What's the justification? You might disagree with the valuation, but that is a totally different argument where bubble should not be used. You can say NVIDIA is overvalued. You can say Microsoft is overvalued. You can say OpenAI is overvalued. But to say it's a bubble seems to be just a misappropriation of the word because there's clearly fundamental use cases for OpenAI. I think most of us are using ChatGPT and Gemini every single day now. We are using NVIDIA chips in virtually everything we do. So to call those a bubble seems a pretty loose. I mean, NVIDIA is not even that expensive to begin with. So it seems a little ludicrous to me to start labeling everything a bubble.
Well, just one note on that, and we'll move on to the actual markets and how you're trading. So at what point do you draw the line between overvalued and bubble?
So I think there's going to be inevitably some type of gray line. But I think a lot of that is going to be the level of exuberance around things. And you can even see this in sentiment on the upside and the downside. And I think that's the beauty of markets. If I've been trading 15 years now. And if I've learned anything over these 15 years, it's an increased appreciation for how much sentiment really drives market prices, right? Like look at where certain stocks were priced in April of this year during the whole tariff tantrum. Now look at where stocks are now. How much has really changed over 6 months? And so that delta between April and now, which is, I mean, the whole market is over 50% higher. That delta is purely sentiment driven with some modicum of financials. And so where I think things start to go into bubble territory is when the sentiment is just totally pie in the sky hopeful. And they don't want to listen to what might be likely or not likely. And when every headline just drives the stock higher, higher, higher. And we were starting to see glimpses of that. You were seeing a lot of OpenAI headlines and cloud computing and data center headlines. It would just drive the stocks higher again and again. That has started to change. Like I think even the last month or so, the market's looking at this more pragmatically. You see stocks like Meta getting punished for their capex and their data centers. So I think the market sentiment is fatigued to it now, but never did we truly reach those levels where we were totally divorced from reality in the broader tech sector.
Before we jump back into the video, let's talk about something most people ignore, but is very important: your online privacy. Your personal information isn't just sitting on your phone or email, it's being scraped, bought, and sold by data broker sites every day online without your permission. Our sponsor today, Delete Me, helps you take that control back. They scan the web for your exposed information, send you regular privacy reports, and remove your data from hundreds of broker sites so it can't be used against you. And in their latest report, they reviewed over 325 listings to see if any data broker had my personal information, and they continue to check every week to make sure it stays off. Go to joindeleteme.com/DavidLin and use promo code DavidLin at checkout, or scan the QR code here on the screen. Get 20% off on all US plans. take control of your privacy today. Let's talk about markets. Let's start with Bitcoin. It's been leading the charge downward. And as we're speaking today on the 5th of December, the stock market is seeing its fourth consecutive day higher as the PCE report came in today, more or less in line with expectations. So PCE serves the Fed's primary inflation gauge, gives the central bank's final inflation number, and the broad market's closed slightly higher today. Well, let's take a look at MSTR and Bitcoin. So here we have Bitcoin down about 7.5% year to date. I'm just going to year-to-date chart. And then MSTR MicroStrategy, we're now called Strategy, down about 40% year-to-date. I wonder if this is just a matter of Strategy being more highly levered, where higher beta than Bitcoin itself. Well, it's higher beta to Bitcoin. And so if Bitcoin goes down, it's going to go down by a bit more, and vice versa on the upside. I wonder if that's just simply the case, or is there a bigger narrative at play where people are starting to migrate away from MSTR? Because when you think about it, institutional players before the advent of Bitcoin ETFs had Bitcoin proxies only, but now they do have other ways to directly involve themselves with Bitcoin. So I'll get your analysis.
Yep. So for Strategy, at its essence, yes, it's theoretically a software company, but it's ultimately just the Bitcoin holding company. The beauty of Strategy is even on their website, you can calculate how much Bitcoin they actually hold. They very explicitly state the net asset value of all that Bitcoin. So in theory, it should, for the most part, be roughly trading around the value of its Bitcoin. And what ended up happening is, especially in late 2024, November in particular, it really divorced from any semblance of that. And now there's rational reasons why you can move away from parity and trade at a premium. You mentioned one of them, which is if investors don't have easy access to alternatives to invest in Bitcoin, that might be one reason. But what we saw in 2024 is a bunch of institutional offerings and ETFs to hold Bitcoin. And so what ended up happening is you would have thought that premium that Strategy was trading at was going to compress back towards one. It certainly took an incredibly long while, but what was happening was almost an inevitability, because unlike most things in finance, the company had a way to arbitrage that gap. And so what was happening is they were issuing debt and convertible equity. So they were effectively selling their equity, which was way up here, to buy Bitcoin that's way down there, which was giving essentially an increase in value to their net asset value. But they were allowing themselves to sell something that's overpriced, which was their equity, to buy Bitcoin, which is their main strategy. And so that seemed to me like it was inevitably going to close. It now has approached trading at parity to its net asset value. And I think for many retail investors, they're totally flummoxed. Why is it that MSTR has underperformed Bitcoin so much? Well, it's because it was trading at a level it never should have been trading at. MSTR, compared to where Bitcoin was doing, it should have never been at $400+ per share. And so this reversion has ultimately been a very sensible and logical one. It's been the market being efficient. They're no longer overvaluing those holdings, which really was only up there to begin with because of just retail euphoria. And I'd also argue that compression is one of the signs that overall markets now are starting to price things in more sensibly, especially over the course of October and November. Markets started to that irrationality in certain pockets came out. And in my opinion, part of that was MSTR starting to price closer to its net asset value. So this move seems appropriate to me.
What about the Bitcoin move itself? That is that is a different story altogether. People have been commenting on how it's diverged from the NASDAQ. The correlation still exists. It's just that Bitcoin has moved a lot lower than the NASDAQ correction over the last 1 month. And now, like I said, it's down year to date, whereas the rest of the stock market's up. What's happening?
Yep. So let's even jump to a chart for this one. Sure. And so with Bitcoin, which I'll just use the futures as a proxy, what we're going to see is that pretty much for a while now, my argument was that sentiment on Bitcoin was changing, because all throughout most of the summer, The market had been ripping higher. We had been seeing high beta names outperforming, yet Bitcoin for most of the summer into the fall was unable to meaningfully go higher. This is at a time when anything speculative had been exploding. So that to me was already a bad sign in sentiment. Then once we break the highs and failed so hard and then go all the way down to here, that to me was, oh my God, this is at least in the short and medium term, that's just the death knell for Bitcoin. We then started to make lower highs, lower lows, lower highs. And now this leg became particularly vicious because this leg was when a lot of the froth in the market started to really come out. That being said, at least short to medium term, as of this day on November 21st, I became bullish. In fact, I bought on this day. I've since sold. But what was the cue that this was potentially going to be the bottom for Bitcoin, at least near term? None of my views are ever long term. I don't know where anything is going to be in 6 months, a year. And I think that's the difference between having a trader on your show versus having an economist or a forecaster. I'm not here to forecast or prophesize anything. It's all uncertain. I have no idea. I am just here as a trader to make very precise bets that put the odds in my favor. I never know what's going to happen. I'm just trying to stack probabilities. And on November 21st, what we saw is an extremely prolonged leg lower where Bitcoin over the course of just over a week ended up losing 20% of its value. We went from 100,000 down towards 80,000. And on this November 21st bar, what happened overnight is we got a massive liquidation, or what I would call a capitulation. A capitulation to me is an extremely sharp, aggressive, high volume move. Essentially, that's where a lot of the longs are either being liquidated, the people that are over levered are taken out to sea, and all the people that are going to sell and panic or were doing things that they shouldn't have been doing with leverage, they end up getting liquidated. And what you saw overnight on 11/21, which I can even pull up real quick, you saw these massive, massive flush outs. You got one right around 2 a.m. Eastern time where the market went from 85,000 all the way down to 81,000 in a massive high volume panic. We then rolled over and we got another high volume flush out as that went to lows. Then by the time we in the US woke up, that it already started to bounce. And that high volume, as you can even see on the daily chart, this was really big volume, big emotion, 20%. I use Bollinger Bands as one of my indicators. So Bollinger Bands are just 2 standard deviations away from a moving average. And so we were far below the Bollinger Band, sharp, sudden move, low liquidity overnight causing people to get liquidated, big volume showing that exchange. So that flush out was my indicator to end up going long. And then that for me was a swing trade. All I did was a simple system of on my swing longs, I tend to use prior daily bar lows. And so I ended up holding that for a bounce all the way up to here. Now, my belief is at least in the short to medium term, that low is likely to hold. There was a lot of strain in the system, a lot of liquidations, a lot of panic even in the overall market. And this also coincided with NVIDIA and its earnings report was really sold off hard. So I believe at least likely until year end, it's probable, not guaranteed, but probable that these lows will hold, will probably consolidate in this range. But I think Bitcoin, for the most part, the glory days of Bitcoin going up thousands of percent, I think those days are over. And people are going to need to accept a world where you get just average returns. And then the question is, Bitcoin is very reflective. Will its holder base be willing to accept average returns when most people are in Bitcoin as speculation? They're trying to buy a home. They're trying to retire. They're not looking for 8%, 10%, 15% returns. They're looking for 100% returns. So when that doesn't happen, what's going to happen next to those holders is an interesting question to me that I don't have the answer to.
Or before I go back to your Bollinger Band, so you said something earlier, you don't prognosticate, you don't know what's going to happen in the future. So somebody might ask you, well, how do you trade then? Because if you don't have at least an idea of where an asset class is going to go, how do you make a decision to whether or not to hold, sell, or buy?
Sure. So there will be things that can stack odds in my favor. So the bigger the move in one direction, and the bigger and faster that move, the more likely it is to reverse. The larger the volume happens on a capitulation, the more likely we are to reverse. So when something like Bitcoin, which is now a relatively stable asset, when this falls 20% in 1 week, and then we accelerate, that rate of change and that acceleration, along with high volume, that starts to lead to the signs of capitulation, especially if people are getting liquidated, especially if people are losing all hope, if sentiment goes extremely, extremely poor. All those things accompanied by a very sharp and large rate of change, those increase the likelihood of a bounce. So I don't need to know what Bitcoin will do in January, February, March. I'm just trying to catch bounces like this. Now, the more severe and extreme the capitulation or the panic it is, the more probable it is that that bottom holds long term. So if we saw this puke all the way down to 70,000 and we got, say, the biggest Bitcoin volume of the year or the last 5 years, the probability of that bottom holding, not just for a week, but for a month or 6 months or a year, increases over time. So I'm really just trying to stack those odds based on sentiment, price action, and rate of change.
Okay, two questions I have on the Bollinger Band. So first one is how do you know at what point the bottom is in? Because if you look at just the red bars, for example, on Bitcoin, they have been touching the purple line, which is the bottom Bollinger Band, for quite some time. And at any given point, one could have made the assessment, well, it's time to, the odds were stacked in your favor for a bounce. But it was only at a certain point where you have the pencil lining there, that particular point, where it actually did start to bounce. So it doesn't actually indicate timing. It just indicates when the odds are, per your word, stacked in your favor. But again, at any point, if I had made the rationale to go in because the odds were stacked in my favor 2 weeks ago, I could have been down a bit because it still went down before it bounced, right?
Yep. So absolutely. Great question. And so what I would say is a lot of those indicators help you observe and stack the probabilities. But what you're touching on is then you need to execute. As a trader, an idea is not enough. An idea is not sufficient to be a successful trader. So you can think Bitcoin is going to bounce, but what if it keeps going against you? What if you're early? So that is where execution and the chart setup matters. So what I'd first point out is this 11/21 day, this November 21st, the further we go below that band, the more the odds increase. So yes, at times we were below it. This now, it's the most extreme of any time prior. The other thing is this volume is really, really massive. So now we're going to hone in with that context in mind to what this looked like intraday. So the first thing as far as execution is once we get these really big panics, that increases our odds. So you could have bought into this panic, and guess what? We ended up going lower and you'd get stopped out. Now, here's the thing. That is okay. It is okay to take a loss or two before the actual bounce comes, as long as the reward justifies the risk and the probabilities. So the other thing I'll look at to help me time my entries is there's various ways to define trend. One of the most common ways to define a trend is lower lows and lower highs. And so what we see here is this stock made, this was, call it the high. That's a very big low. That's a lower high. That's a relative low. So this is kind of a higher low to here. So this was kind of the key moment. Like, are we going to bounce and get above here? So if we got above this high, this lower high here, that to me would have been a confirmation of trend that we're going higher. What ended up happening is this became the lower high, then we made an even lower low. So this trend was never truly broken, right? So if it was high, low, lower high, lower low, lower high, we never truly broke until right here. And so this was the breakdown. We failed to go lower. We very aggressively break higher, then we break that lower high. So officially right here is where the trend has been broken. And so then what you hope will happen is that you'll get a series of higher highs and higher lows against these big picture lows there. And so what ends up happening is we make highs, we make higher highs, higher low, highs again at roughly the same level, higher low, and this kind of continues until we eventually break out of that. But once this reclaimed, we never went back below those lows. So you're never going to know with certainty, but what you're trying to do is identify these nuances that stack the odds in your favor, then wait for that break of trend. And again, you will take losses along the way, and mastering the timing and the execution. Well, guess what? There's a reason why it's not that simple. It's taken me, 5, 10, 15 years of a career to truly master. But with practice and expertise and attention to nuance and experience, you're able to more often than not place bets that eventually in the aggregate leave you to be a winner.
Okay. The other question I have is, do you usually use the default 2 standard deviation bands, or do you sometimes use 1 standard deviation, change it up?
Yes, sir. No, I keep it to the default. For most indicators I use, I keep it to the default just because if most market participants are doing that as well, I want to know what most market participants are looking at. So even for different indicators like VWAP, which is volume weighted average price, I want to know what everyone else is thinking and looking at so then I can interpret it the same way. And ideally even a step higher than them.
Okay. Lance, at what point do you determine that when something is hitting the lower Bollinger band, that it's due for a bounce and not due for a further correction? In other words, sometimes when something is hitting the lower band, you can make the deduction that, well, perhaps this is the beginning of a bigger correction because it's broken support.
Yep. So, for example, that context and that example you just gave is perfect. Right here, these were the lows at around 99,000. We break those lows on this bar. And so because we just broke to lows, yes, we're by that lower Bollinger Band, but we haven't really trended yet. So you can't, I think most people fail with technical analysis because it's not that simplistic. People want a system where you say, oh, if it ever goes below the lower Bollinger Band, you buy. If it ever goes below the lower Bollinger Band, you buy. But it's all about applying this and understanding the nuances. So when this breaks right here below 99,000, we're just breaking down. We haven't accelerated. We haven't moved in price, right? If people already got the opportunity for 4 days, people could have bought at 99,000, 100,000. So this isn't some incredible buy when the market just had 4 days to buy in this range. That being said, when all of a sudden, a week later, we go from 100,000 and then quickly, briefly flush down to 81,000 or so, that is a special opportunity because just a week ago, we were up here. So it's the overall nuance of all of this put together. And most importantly of all, I want to see multiple down days in a row. I want to see a huge amount of ground covered. I want to see sentiment hitting just a fever pitch. I want to see that volume capitulation. I want to see this really escalate. So if we look when this broke down, if we look on this 11-13, this volume, yeah, it's higher than the prior days, but it's not higher than average, right? If this average volume, if I just approximate it, is right around here, this was the only day that did multiples of the average volume. So the more days down, the more extreme the move, the more it's accelerating. Look how big this bar is. This bar went from 88,000 all the way down to 80,000 pretty much. So we went down almost 10% in one day after already expanding from that price action and on 2x plus volume. So it's this confluence of all these nuances that are what helps your odds go in your favor.
Let's segue into stocks now. So I've heard the argument, and I'm just going to pull up one example, that Bitcoin has been a leading indicator for stock price performance. This is from Tom Lee from Fundstrat Global Advisors. The Bitcoin price, he said, the direction of crypto prices could inform the trajectory of the U.S. stock market. Bitcoin on Thursday declined to levels not seen since April 21st. This was up to November 20th, so some time ago, amid a broader market pullback. And the crypto market has been limping along since October 10th because on that date was a negative shock. I think that this drip that's been taking place for the last few weeks in crypto reflects this market market maker crippling. And in 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it. I think crypto, Bitcoin, and Ethereum are in some ways a leading indicator for equities because of that unwind and now this sort of limping and weakened liquidity. Do you roughly agree with that kind of viewpoint?
So I don't. I don't at all. And I think again, this falls into the category of Tom Lee's someone where he's in the media and a headline that can be great, awesome. But what I would say, which is probably not super audience friendly, is that Bitcoin's not that simple. It doesn't just trade super cleanly on one factor or one correlation. There are times when Bitcoin leads the market. There are times when it absolutely doesn't. And so the interesting thing about Bitcoin is it's this kind of like this chameleon asset because there's a lot of times it trades in different ways. So if you think about it, Bitcoin was supposed to be a hedge for inflation. What happened though in 2022? Bitcoin got absolutely smoked along with the market and risk assets. So there's times when it will trade with risk assets. There's times that investors may view it as an inflation hedge or a dollar being debased hedge. And there's also times where it's just going to trade on pure speculation. But to say right now that Bitcoin is leading or trading with the markets is just nonsensical. How is it that we have the Nasdaq and the S&P at highs, but Bitcoin is very much well off highs and showing a ton of weakness? It's got its own sentiment. It's got its own correlations du jour. And the truth is, Bitcoin had so much money pouring into it. Institutions, Bitcoin treasury companies. There was this whole theme as far as frothy bullshit speculation. There was this whole theme of crypto treasury companies, nonsensical bullshit. And think about how many companies were doing that theme and how many billions were being poured into Bitcoin and Ethereum. Yet still, Bitcoin and Ethereum were still showing relative weakness over the last couple months. And so in no way is it leading or even going in tandem with equity markets right now.
Right. I'm just going to pull up a chart here. So what you're saying is because Bitcoin's down and the S&P, so Bitcoin here is the bar chart, the S&P is reaching new all-time highs. The relationship still stays relatively the same. So whenever one of them goes down, the other one goes down with it. It's just that Bitcoin has moved a little bit more to the downside. But it does seem like a coincident indicator, not a leading indicator, just by observing the chart. But the bigger question here is: do you ever look at the performance of one asset or do analysis of one asset to make an informed decision on another asset, or do you study each asset separately?
Well, I think doing that is an amazing formula to blow yourself up as a trader, because those relationships don't always hold true. They are constantly changing. And so the reality is Bitcoin trades across multiple different correlation variables, and those are constantly changing. And if you ever fell in love with, oh, Bitcoin is supposed to trade with the market, or Bitcoin is just high beta with the market, well, guess what? The market has bounced all the way back to highs, and Bitcoin very much so has not. And so I do not wed myself to any view. And instead, it's understanding why is Bitcoin trading the way it is now and which variables are the most important to it. There will be times when Bitcoin moves based on inflation. There will be times it moves as a speculative risk asset. But trying to simplify it to just one and trade based on that, that's how you blow up.
Let's apply the same analysis now to the stock market. So we talked about the tech sector earlier. Let's just look at the S&P 500. I can let you pull up a chart if you have one.
Sure. I'll throw up the S&P.
And I have to note that the S&P is like, what, 40% tech stocks, Mag 7? So
yeah, I mean, it is pretty wild. Yeah, it's wild dominance of tech. And the craziest part...
I do wonder if you have a different analysis on the S&P versus the Nasdaq because of that, but I'll let you answer that.
Sure. So what I would say, and I think this is an important point to make, people, and it's so funny because I was just home for Thanksgiving, and even in my daily life, all the time, people will ask me, hey, Lance, are we in an AI bubble? Is the market going to crash? Is the big one coming? And what I would say is, guess what? If you're looking for the big crash, it already happened. It already happened. And if you're not invested because you're scared of it, well, guess what? You've already missed the whole move. The big crash this year was in April over the tariffs. That already happened. We fully retraced. And so now here's the thing. So much of what I think is a crash coming or not, besides some exterior motive, or not even a motive, but like external factor, like COVID, something unpredictable and random that nobody can really foresee. Like, first of all, that's random and beyond anyone's prediction. But outside of that, the other thing that can cause a crash is super euphoric sentiment. And so when I look at the price action this year, what I see is extremely steady price action. This is the definition of grinding higher, consolidating, and then grinding higher again. And so I mentioned how I like these Bollinger Bands, and that oftentimes one simple measure of overextendedness is trading outside these Bollinger Bands. We almost never over the last year, as we recovered from the tariff sell-off, never are we really outside those Bollinger Bands. Maybe briefly here, but this has been a very sustainable up move. So might we get a down move? Sure. But am I expecting some big crash? No, because this was the big flush out. All the weak hands already panicked. People were already taken to the cleaners this year. April was not that many months ago. So if you're expecting some massive panic, sure, anything can happen from an external cause, but there's not a lot of leverage and bullshit built into the system right now. I just don't see it.
Right. So let's take a look at the latest data point. So when the S&P is trading at near the middle of the Bollinger Band, how do you evaluate momentum there?
Yep.
Because it's not stacked one way or another, right?
Yep. So this middle line is a moving average, and so a moving average is just simply the average of whatever that prior period is. And so that is one way that you can define equilibrium. So when a stock is trading by or close to the moving average, it's roughly at its equilibrium point. And so the same way I think of almost like a rubber band or a pendulum. If the pendulum shifts too far to one side, it can keep going, but the further you shift, the more probable it is to retrace and the greater the magnitude of the retrace. It's almost like fighting gravity. So what I see here is this whole last year, post-April, we're steadily climbing higher. We never get too far to the euphoric pendulum. And most of this last month, the truth is, we're never that far away from the equilibrium. And even right now, we're above the moving average, but we're just consolidating across. So I would just view sentiment as steady strong. And a lot of times in steady strong, you just don't fight the trend. And so I don't see anything too crazy, but just pretty even, rational, steady, strong sentiment.
Okay, good. Let's end it here, Lance. It's good analysis. So we'll catch up next time and do more market updates. Where can we follow your work in the meantime?
Sure. I love it. The best place to follow me is TheOneLanceB on Twitter or TheOneLanceB on YouTube. And thank you so much. It was a great discussion.
Yeah. Thank you for coming on the show and share your thoughts. We'll follow Lance down below. Make sure to click on the link so you can follow Lance there. Thank you. We'll speak next time. And thank you for watching. Don't forget to like and subscribe.